Good afternoon, everybody, and welcome to today's edition of Live Market Analysis USA. My name is Capolingua, the market analyst over here at ThinkMarkets Australia. It's a pleasure to be with you as we head over to the US and try and find the best stocks to buy right now. Before we do that, just a little note on the agenda. It's very simple. If you're listening to me on Zoom, live in session, or you're watching me on any of the streaming services, YouTube, LinkedIn, Facebook, or Twitter, there should be a Q&A window there somewhere. Everything listed on any of the exchanges in the US is fair game. Send them in and I'll give you my best technical and fundamental analysis readers. With that in mind, while I'm waiting for those to come in, I've got a couple actually that have come in from Twitter. I'll do in a second. I'll just talk about the indices here. So we'll do the NASDAQ composite up first. There it is. And a very important move in last night's session. And we know, as you know, we do on Thursdays the indices. So I won't spend too much time on this, but it has to be mentioned that that turnaround last night is very rare, very welcome, of course, but it does, I think, change things a little bit. I think the market had skewed itself a little bit more towards the short side. I think, I think there might have been a little bit of trepidation investing ahead of the Fed meeting next week, but we did see a bit of money come in. Now, the volume wasn't massive. It was roughly in line with the previous session, but it wasn't that small either. So some money got put in yesterday and it tended to go into the larger cap stocks. So if we look at say the Dow Jones 30, you can see the oversized candle there, really getting back the previous two candles. And we know black candles are supply. To have a white candle as big as last night's session was is very, very impressive. I'm not going to get too excited. I mean, the Russell 2000, look at the size of the decline here. Look at this huge candle to the downside and really only getting back a fraction of that. I'm encouraged by what's occurred. We need to see some follow through. That is the message there. So, it'll frame, I guess, some of our discussion today. We have a couple of questions coming in here from Chris. I'm using the ThinkMarkets platform to trade CFDs in the US. Thanks, Chris. And I have to wait to markets to open, or can I place trade? Oh, well, this is probably a good one for Nick to answer. And Nick, do you want to maybe hop in to the discussion and just quickly answer that one? Yeah. It's literally just a mouse click, isn't it, Nick, to get from one account to the next. It's that simple. Yep, it's so simple. So the question was, do I need separate accounts to trade Aussie physical shares? The good old fashioned buy, hold, sell on our four big banks and BHP and Rio, and a separate one for US, and yes, you do, but it's very easy to switch between them. Okay, let us head to the requests for today, and I'm going to, I'll do some scan list as well later on, but I want to answer S. Stewart, S space TEWART is the handle on Twitter, and let's just call this person Stewart for ease. Asking about PAAS, which is Pan American Silver, and we looked at the silver price yesterday. We said that it was starting, the uptrend was starting to moderate, and we were a little bit concerned that we really needed to see very soon a move back up to the upside to continue the momentum that it had exhibited previously. This one has suffered, I think, really over the last couple of weeks as silver has only pulled back modestly. So it is disturbing when you see the underlying commodity only really have quite a mild pullback, but then you have a more severe pullback in the securities that trade or dig those commodities out of the ground. So it does get back to this idea for all of the stock investors out there listening to me, that if you've got a view on a particular commodity, let's say you think silver's going up or gold's going up or copper's going up, we say the best way to do it is to go directly to the commodity and trade the commodity itself. And that way you can be sure that none of these operational issues that stocks often fall foul of are going to impact on the profitability of your trade. Look, there's some problems here. Let's talk about the trends. Okay, so the long-term trend was changing, went through the traffic light system to orange, indicating that the long-term downtrend was weakening. The short-term trend was very strong. The price action was good. The candles were quite reasonable. That's turned around very quickly. We've got issues here with certainly some indecision in this candle, and then a very decisive candle to the downside here. Complete inability to fight back, and that's the problem. We want to see demand fight back like it did last night on those broader indices. Didn't happen, and these are very meek candles, very poor showings from the demand side. Okay, there is a little bit of hope though, and I think we can get to a hold here on the basis that we do appear to have I think quite concerted demand around here. Last night's volume kicking back in, telling us that some of the supply that has been active in the system was removed, and therefore it sets this level as a very clear-cut point of demand under which to hide a stop loss. So that low there, you can see up here is 1675. I'll mark it on the screen for you, and I would suggest that we have a stop set suitably beneath that. And in terms of what's suitably, what does suitably beneath mean? What it doesn't mean is, say, putting a stop loss at 1674. I think that's kind of the worst thing you can do, because the fund managers out there that are trying to scoop up stock, if you're trying to buy, the best time to buy is when people are selling, and when a stop loss is triggered, that's when people are selling. So the novice trader's mistake is to go, well, 1675 is the point of demand, I'll put my stop at 1674. And the fund managers know there are a bunch of stops just under 1675. 1675, 1674 is 3, 2, 1, even down to 70. So you need to get a reasonable distance past that. And I say as a minimum, as an absolute bare minimum, you can go 0.5%. You can use, so 0.5% would be 9 cents, which would take you to say 1676. 1666 would be the earliest under that model. So say 1666. So now you're getting even underneath the 1670. Okay, so you're getting underneath, I'm not saying 1670 is a round number, but that 70 is round enough that you want to get your stop loss beneath it. So something like that would be more reasonable. Other people might use the average true range over the last, say, 10 trading sessions and use that to set your stop loss beneath. But you have to be sensible about setting them, and don't just go a pip beneath, because you're asking for trouble. So what we have for Stuart, let's call him, is a hold on this one. So I have to go a hold here. As long as it continues to close, let's go greater than 1666 is where your stop's going to be. Would I buy it here? I think this is a very impressive candle, but I don't think it's impressive enough given the problems we have here on the short-term and long-term trend to upgrade it to a buy at this stage. Not to say that it can't, but it would need to do a fair bit of work to something that looks a bit like this, and perhaps in the green zone above that long-term trend zone, we might be interested with the right sort of candles. But even then, it's problematic, because up here we do have, I think, what is going to be a very, very stubborn point of supply, because I think a lot of traders, probably like Stuart, and even myself at that point in time, was thinking, really probably from this candle here, that it was looking quite good, that we're in for a good run here. Silver's got more to do, and we can get some money out of this. So I think we would have been positioned quite sharply to the long side. So now that we've sold off like that, I think there's a lot of disappointment, and a lot of disappointment equals a lot of latent, what we call latent supply in the system. So just be aware of that. For you, Stuart. Now, the next one Stuart have, it's the same theme, so I can probably do it quite quickly. It's WPM, which actually looks far better, doesn't it? So this is Wheaton Precious Metals, another gold and silver company. It goes to show perhaps the benefit of buying the stronger chart. I mean, PAAS was more of a turnaround play that entails a greater degree of risk, whereas something like WPM is bottom left, top right. So I'd suggest that the underlying theme within the market is more skewed towards excess demand. This one's more than fine. I think absolute hold here, no doubt about it, in line with a very, very solid short-term trend, a wonderful long-term trend that continues to develop here. I think the candles are still very good, even though it has pulled back, whereas, say, the PAAS, we saw far more black candles in there. There's far more excess supply. There's more fund managers probably selling out of that one, if anything, to switch their exposure to this and maybe some of the other stocks in the sector. And another wonderful candle there. This is closer to a buy for me. And I'm going to just refrain from that. I'm going to say one more candle. If this last candle here had in fact closed above this supply candle here, and that high there is 5017. So if you're not sure, that's the high there, 5017. If this last candle here had indeed, not sure why it's not going there, had indeed closed above 5017, I'd actually just go plus 1/3. But what I'm going to do is I'm going to say, look, let's see one more candle. Let's see another confirmation that demand is coming back into the system. And that's where we could add a third on the basis of the very impressive longer term trend. So that confirmation candle might look something like this. And it is instructive to draw this candle at the start of the session because we're going to use it many, many times. So that is our demand side candle. It doesn't have to be that big. Look, really anything that closes above this little intermediate peak here, which was 5017, is going to be good. And you might end up seeing a little bit of a lower shadow on there. That's fine as well. Not going to let me do it just from the width of the candle, unfortunately, but we can make adjustments to show what another variation of the candle would be. And if I saw that, then I would happily go plus 1/3 on that one. The other one that Stuart has, and it's another one that's just come up here from Haraju as well, is MSFT, which is one we've been watching very closely over the last few weeks and bordering on months now. And you can see where our thinking has been skewed more to adding risk to this one. These are the previous scratchings here where I probably was talking of demand side candles, similar to the ones I just discussed. And these are the two most important long side, demand side Japanese candlestick patterns you can find. And they do summarize between them, I'm going to say 100% of all other candlestick patterns, which can be blended together to either show transition between, on one side of the market, excess supply, and on the other side of the market, excess demand, or not so much a transition, but just a continuation where excess demand is prevalent throughout that entire session. Okay, the background is happy to add some risk. I can't see any reason not to continue to do that. Certainly a dicey situation since the last time we looked at it, having cracked beneath the short-term trend zone. I would have said, really based upon that candle, you would have seen that close, and I'll tell you what day of the week that was. So that was the 25th, which was Tuesday's candle. And you would have seen that obviously Wednesday morning, and you would have probably have set up orders based upon that candle around the open of trading on Wednesday night to exit 1/3. And if you did that, you probably wouldn't have been very disappointed because you ended up getting a really good price for that. But I can certainly see why, if you're not sure which candle I'm talking about, it's this candle here, why you would have been very concerned and looked to have potentially even exited a portion of that risk you'd added up to that point because of the lower peaks and the breakdown through that level, and then ultimately the close through that short-term trend zone. Turns out that history shows it didn't go that way. So if you're holding the full position, let's get to the point here. If you're holding the full position, I can't see anything but hold on this one. There's absolutely no reason to sell this based upon last night's candle, which is amazing. And that's probably at odds with many of the talking heads I've seen on TV this morning saying that, oh, okay, Microsoft's on a high multiple or whatever it is. And I just think that ignores what the rest of the market thinks about this one. There is going to be a little potential point of supply. That high you can see up here is 315.82. Is it something you need to be afraid of? No, I don't think so. I think there's enough momentum here and the candles are good enough to hold till you get there rather than put on an order in the system to exit in advance. So let's see what happens when we get there. We'll gauge the candles. We'll see if we're getting those upper shadows. We'll see if we're getting those black bodies. And really, what we don't want to see, and the perfect examples are right here and here. If we see those two candles, I haven't left myself enough room, But if we see those candles up here, then we'll take some action. But I think we can afford, given the trends, to see that supply manifest before we actually do something about it. So let's go, obviously this is a supply zone up here. Would I buy it here? That's a very good question. I think if you've added some risk to this in the past, I think we're just a hold on the basis that we are within the proximity of that supply zone. It's very close though. Could I add another third? The candle is so strong. Yeah, look, I'm going to go add another third because I think the ultimate target's up here at 350. Okay, so hold if you've got it, and I'm happy to add partial risk if you don't. Okay. Let us quickly, because I wonder if we've even had the ability to get the brokers to upgrade some of these numbers yet. We won't know, of course, until we see how this plays out over the next couple of weeks. But what I'm talking about here is the Refinitiv Icon valuation spreadsheet I use, and Refinitiv Icon collates the key data from 46 brokers all over the world who cover Microsoft. And we can see their forecast consensus numbers here. So basically they take an average of all the data points they collate for revenue, gross income, EBITDA, EBIT, so on and so forth. And then we get some of the forward-looking ratios down here. We've also got data that's in the bag, so data that has occurred and is publicly available to anyone. Then we see that we get over here, the spreadsheet doing some calculations on the rates of change of that data. Brokers will give you a price target typically, and they'll give you a rating. In terms of the average price target, they think that Microsoft's worth about $324, which is allowing about 6% upside. Interestingly, if we go back to the chart, that supply zone a little bit lower than that. So that valuation would suggest we can get past at least that initial supply zone. And in terms of their ratings, we've got 19 strong buys, 28 buys, 6 holds, 1 strong sell. I think that one's a little bit out of step with their contemporaries. Then I like to head, there's so much data here you could look at, but I like to head down here to the EPS line. And what I like to see is bottom left, top right. And that tells me that through a global pandemic, through global supply chain shortages, and through rampaging inflation, interest rates, and an uncertain outlook, that this particular company has the goods. It's got the products and services and the business acumen among management to make money no matter what. And Microsoft certainly ticks all of those boxes. And then, of course, that's what we had in the past. We want to know what it's going to do going forward. And then we have to take this with a pinch of salt, because this data is only as good as the 46 brokers who are making these estimates. But for what it's worth, we are seeing that bottom left, top right trend continue. So much so that we've got a 16% annual compound growth rate in earnings over the next 3 years. That's about as far as I like to look forward. And I think that's very impressive. The average return for the S&P 500 is around about 8%, depending on when you take that measure. At the moment, it's far less than that, obviously. So to be getting, and that's adjusted obviously as I get this cell to match this cell. And I know people in the US might be saying, look, Microsoft doesn't have a June year-end cull. It's just a quirk in the platform. There's nothing I can do about it. But as long as they match, I have double-checked that these numbers are correct. It's not 16%, now it's 15%, no big deal. Again, it's well above the market's average growth rate. So the market's average PE is about 15, 16 for the S&P 500. If we can get something that's growing at roughly double the market's return for the same price as what the market is, then we've got a bargain. Not quite the case here. The PE is 26, so it's much higher than the market, and it's reflecting a couple of things. Obviously, there's no free lunches in the market. Investors are going to pay more for more growth. The other thing, I think we've got a quality premium at play here because of just how good this company is. So investors naturally will pay more. So you could have 8% growth, and this thing will still be trading on more than 15 PE. So yes, it might have 8% growth, which is market growth, but no doubt Microsoft will be trading at a high PE than the rest of the market because of the quality that's involved there, the lower volatility, the sleep at night factor. And you can see that in the past, investors have paid way more for Microsoft, certainly than the 26 median that I'm using in this calculation here to get the valuation. So I think this is a very fair value, both in terms of the quality, both in terms of the growth, and both in terms of the 5-year historical range. And therefore, I've no reason to doubt without my spreadsheet's valuation of $345. So what we might start to see now is, because we only had those recent earnings and brokers aren't going to release their assessments of those earnings immediately, it's going to take them a few days to work through those numbers and write those reports and send them to Thomson Reuters. We're going to see probably some upgrades come through. And I would say that this 324 is probably going to converge towards my 345. So there's no red flags here. There's nothing to suggest that Microsoft shouldn't still be a buy in line with the chart that we're seeing here. Okay, let us keep moving on. The next one, which is from Haraju, CCEP. Which looks amazing. Coca-Cola Europacific Partners. The other one I might just quickly check out is KO. That's obviously not the other Coca-Cola, the main Coca-Cola. There it is there. So we're probably seeing some of the maybe there's currency impacts. Maybe, to be fair, the fact that the European economy is growing at a faster rate right now because it's recovering from COVID, from a lower base, I would suggest, than the US economy, and that's why that's probably doing better than the other Coke, the main Coke. But no complaints here, Haraju. Could I buy it? Well, it's just a long way away from my light green zone, and that would be the only thing that that would prevent me. But otherwise, you know, it is the perfect case study in when to buy stuff, and if you can establish that short-term uptrend nicely and that long-term uptrend, then it really is just a matter of waiting for pullbacks to that trend zone with the right candles, those demand-side candles. And even as late as that one was probably very good. And probably even that one, it's not so far away. But once we're starting to get this far away, I tend to think that your possibility of mean reversion is just increasing a little bit. And yeah, Nick also commented there that the currency, I think, is moving in the favour of this one as well. So I'm going to go hold. There's no question about it, Raj. If you have it, then I can't see any reason at all to sell it. But I'm just going to refrain from calling it a buy. And we may get another opportunity to buy if we get a little bit of mean reversion back to that light green zone, which is what I call the value zone. And we can see time and time again how, you know, when we're getting close to that value zone, we can see the candles that come in. But we don't always get there. You know, sometimes the price action changes and we get this period of consolidation. But when the price action is good and the green zone is expanding, that's the best time to be taking those correct candles. So you can see how this idea of trend, price action, and candlesticks, you know, the three cornerstones of my analysis come together in that chart. The next one is, well, actually, before we go to the next one, let's quickly head over here and have a look at what the valuation says for Coca-Cola. I mean, it's one we might well want to buy in the not too distant future. We've got 15 brokers covering. Their average price target is 67.93, which still allows a little bit of upside from here. Their ratings show 4 strong buys, 10 buys, 5 holds. In terms of the EPS line, do we have bottom left, top right? Well, actually, we don't. And this is where we might not see as big a quality premium for this one when we get to the PEs as Microsoft. That has the customary December year end there. But, you know, that is a pandemic year. And it was harder, let's face it, to go out to cafes and restaurants and buy Coca-Cola, particularly in Europe. So we can probably forgive that one. And if you do take that out, then the trend actually is very good. And the trend going forward, as far as the brokers are concerned, are also quite good. And that gives us a 10% compound annual growth rate. So better than the market return, for slightly better than the market PE. So I can see my spreadsheet's probably going to like this. In terms of the 5-year historical range, we're definitely beneath that with our target PE. So that's okay as well. And look, my valuation coming out pretty close, I think, to the brokers, maybe allowing just a little bit more upside. So I think there's some good growth and some good value in this one as well. And there's absolutely nothing in that valuation which suggests we couldn't buy it on the chart if we wanted to, particularly if we've got a little bit of a pullback there because we're getting it at somewhat more of a discount. Okay, let us keep moving here. We've got PLTR coming in on the chat now from John. And it's one I know we've covered a few times, and I think maybe the last time we looked at it, we said that we needed to see some price action that you know, was showing higher peaks and higher troughs. I'm guessing this was roughly the last time we looked at it. It hasn't occurred. not yet at least, and not to the degree I would like. I think if you were to call whatever this is over here good price action, I think you might be just kidding yourself a little bit, because good price action really is nice separation between those troughs and second from last peaks. The black candles are disturbing, to say the least, and the fact that it's continuing to be impeded by this long-term trend, and really now the short-term trend has changed. Yeah, I'm definitely not a buy. Buy's completely off the table here. Hold, I think, I'm struggling to get to hold as well, because we are, not really holding on to points of demand that should be held onto. So, if this is a stock that, major indices were up last night. We talked about the NASDAQ, the Dow, and the S&P 500 rising. This is not in the basket of stocks that fund managers are really favouring at this point in time. I'm probably closer to a sell than I am to a hold, but I think I've painted enough of a picture there. No point going to the valuation spreadsheet on this one, because it's not one we're looking to buy, in my opinion. Nick providing some great information for those Aussie investors listening that are looking to get involved in US shares. Now, 11:30 p.m. Sydney time is the key time. That's obviously when the New York Stock Exchange opens, and that's when US share CFDs on our platform become active. 9:30 over here in Perth time, quite a reasonable time actually. So if you're in WA, you've actually got a really sort of a good time difference there to be trading US shares. Now, let's keep going down the list here. I might head over to the streamers. Adonis is here with ITCI. Looks quite good there. I want to zoom out first, Adonis, and just make sure I can see the key points of supply. The risk is, we do all this great analysis on that zoomed in chart, all the time failing to note quite a significant point of supply up around here. And that would be a shame, because we'd waste a lot of time, I think, if we were too zoomed in before we got out here and realised, well, there's probably not a lot we can do about this one. Buy, hold, sell, 100% it's a hold. That we can see it's great short-term uptrend. The long-term uptrend is starting to develop again after, let's face it, a period of significant uncertainty. But just looking at the company, you can see it's quite a sketchy trader, in that we get lots of shadows both ways, a lot of flip-flopping between white and black candles, and that concerns me a little bit. As we always say in these sessions, we need to get to the end of the session with a short list of stuff which we think is the absolute best, and then we're going to only look at those. So I don't think this is going to make that list, so I'm going to stop the analysis here. I'm going to say, look, if you've got it, happy to hold it. I'd be concerned about that point of supply up there. I know it's not. I know I've labelled a POD, and I'm sure many of you shout at your screens sometimes. Keep shouting at your screen. Maybe I'll hear you one time, because I do make those mistakes sometimes with my POSs and PODs. A hold, not a buy on that one. I'm going to keep moving. Let us go to HSY. Hopefully still looking sweet there. I'll get back to Hirachi, your one next. I know I've missed one there. Oh, amazing. Last time we looked at this, we said 1/3. We said it was the quote-unquote sweetest chart on the market. And I'm guessing it was probably on this candle here. And I can confirm by saying, well, it was Friday, 15th of March. It was 15th of March, of Friday. It was actually a Wednesday. So I wonder, we looked at it 2 days later. It was in this black candle there. That's odd. I'm curious as to when we actually looked at this, because I don't think I would have said buy on that candle, but I certainly would have said, wait for the candles to come in. And you can see 100%. That's your candle, everyone. That's the point. That's the compulsory entry, isn't it? Plus 1/3 there. And I think really on this next candle here, you could have actually even added risk to that. And then on this one here, you're adding again. Maybe not on this white candle here, just I'm a little bit uncertain with the black candle, probably waiting for some confirmation. And maybe you didn't get enough confirmation before last night's big pop. But I do feel that if you're following the model I teach you in these sessions each Friday, there was every opportunity to get a full position going here, and you're enjoying that today. The question is, do you take some profits on it? And I think you know my answer on this. Absolutely not. There's absolutely no reason at all to let go of a single share of Hershey. Would I buy it here? I'm actually not averse to buying it. That candle is amazing. And when I zoom out, you'll see that we are at all-time high. So there are no other major points of supply, I think, to get in the way. The only one which will be an issue is $300. And you know my feeling on round numbers. I do like to take some profits around there. So from a reward to risk perspective, if you're setting as a stop somewhere around here and you're getting it here, you've got at least 1-to-1. And therefore, I can't see any reason not to continue to add some risk here on this one. Okay. And it would seem totally outrageous. I get it for many people. Many people would have probably just turned off. They've gone, look, this idiot. They're telling their friends after watching this webinar. I just watched this webinar with this absolute idiot who looked at the Hershey chart. And this, you know the Hershey chart, right? It's bottom left, top right. It's gone up so much. It's so expensive. And yet that idiot said, I could still buy it. I'm never going to watch that idiot again. And I say, hey, to each his own, you know, and I may be proven wrong. We may find, and I hope this is not the case, and I don't want to jinx it, but we may find tomorrow the Hershey candle looks like that. But I just don't think that's probable. It's possible. I just don't think it's probable. I would say that there's every indication that this is a stock where we have just extreme excess demand. Okay, and think about how you get excess demand. We have sellers, on one side, all right, and then we have cash on the other side. Well, let's call it demand, cash, whatever you want to call it, sellers. That's obviously supply equals sellers equals what? Equals stock, right? This is the balance. And you want to sell if think not going up anymore. Think about it. Or better returns elsewhere. Okay, that's why you would sell. That's why you'd be on that side of the equation, right? Otherwise, you want to hold. You want to withhold. It's not just hold. See, this is the thing you have to realize. It's not just hold. It's withhold. If you get this, immediately you're going to be a 10 times better investor than the person who called me an idiot. Because it's not just hold, it's withhold supply from the market. Okay? If you put it back, oh no, I just got rid of it. Maybe we'll pick that up another time. That's a great reason. It's gone. The other point, what I wanted to write on the other side, as long as you got that withhold thing, which now doesn't exist, the cash on this side, right, which is demand, they will buy if, what will they buy? They think it's going up. Going up, first and foremost, that's why you buy. But also, it's not just that it's going up. It is the best place to put your money. And here's the thing, you got to think like a fund manager. They're not putting all their money on this, right? That's silly. They need to diversify. But certainly, there's every reason to put some of their money on this, right? And that's just cash, it's just demand. So if we've got the supply side, which was over here, right? And we've got the demand side, which was over here. And we know the supply side is, it's going up. I know there should be an apostrophe for there, and it's also the best thing I can do, right? And with withholding supply, I know I'm spending time on this, but it's so important you understand this, right? And here's the divide, right? This is a chart which tells me that everybody who could possibly supply, not everybody, right? But let's face it, the vast majority, disagree with me if you like, but the vast majority of people who own this stock think it's going up and they think it's the best thing they can do with their money, right? I think that the people who have cash think it's going up and it is also the best thing they can do with their money. So forget what you're thinking. And this is where people fall down time and time again. They apply what they're thinking to the market, and the natural response looking at that chart is, that's gone up too much, I can't buy it, it's too expensive. That's your tiny little thought bubble. What is everybody else thinking? Well, everybody who owns the stock, they are withholding their supply. Why? Because they think it's going up. It's the best thing they can do with their money. Everybody who has cash, they're throwing their cash at this thing, even at higher prices. Think about what that means. Normally when prices go up, people demand less of it. I would argue they're demanding more of it. Is the outlook for Hershey getting better or worse? Is it getting better at an accelerating rate? I'm trying to teach you to stop thinking like you and to start thinking like everyone else. And these charts, these candlesticks, these trends and price action are just telling you what everybody else is thinking. With that in mind, let us speed up and go to IBRX, which actually looks half decent here. Again, apply this idea of what is everybody else thinking about it. Hey, they hated it for a long time. I get it. But I think they're starting to like it again. They're starting to feel that the future whatever this thing's doing, and honestly, I couldn't care less, but whatever they're doing, it's starting to get to the point where, this is starting to require some allocation of capital. Furthermore, the people who have it, they're starting to feel the need to withhold supply rather than punch out as much supply as they possibly can for fear that it's going to get worse, for fear that this isn't the best place to have my money. And all the way through here, they were not withholding supply. They were letting it go like crazy. But they get to a point through here where they're starting to withhold. And how do you know that? Well, I teach you this stuff every week. I'm sure you're starting to learn it. I'm positive you are. Please don't disappoint me by saying, hey, Carl, I come in every week. I haven't learned a bloody thing. But when these troughs start to rise, anyway you get a trough, rising points of demand. Think about what that means. The money is starting to come back in and the supply is starting to be withheld. Again, those rising peaks. Each time it pops up, oh, I better get out of this because it's so awful, I better sell some. Well, next time it went up a bit more and, actually I won't sell some because it's starting to go up again. I think it's okay. I can certainly get to a hold. Already all the reasons why I can't get to a buy. There's some good stuff going on, but for me, this is too speculative. Hey, that's the way I think, and I can't impose my set of risk management parameters or my risk management fears and hopes and dreams upon you. Some other people who are a bit more risk seeking, maybe less risk averse, if that's one way to put it, might say, oh, I can see a reason to go plus 1/3 here. That's not me, okay? Not yet. I think it's got a bit of work to do, but otherwise, Haraju, I'm interested. Clearly, the market's interested. So even that change of thinking of, well, it's obviously not a sell anymore. It's at least a hold. We're starting to withhold, not just hold, but withhold supply from the market. And that is a very important step in allowing one of these beaten down turnaround stocks to go back up. I should give Perry the credit for Hershey. Perry's asked for Hershey. Now, Perry, the pressure's on here, CCEP. Actually, we've done that one. That's another very good looking one. There's also looking very sweet. Perry's on fire today with the puns. That's my department, Perry, so be careful. IVERIC Bio is not Coke and it's not sweets, chocolate. It's something completely different. Yeah, the chart looks very much the same. And this is probably my favorite chart. I mean, that's amazing. It's just so good. And again, Perry, I think you know where I'm going with this. It's just a bit of a ways from the light green zone. But even then, and look, if you don't want to do a third, do a quarter, do a fifth. But whatever it takes to have that little bit of skin in the game on this, what is it? 1/5? I mean, just to put some skin in the game and to say, well, it's such an amazing chart, such an epitome of demand that I just want to have some skin in. I'm going to do a fifth of what I normally put in because I'm a little bit scared. Buying charts like this are scary, but I'm going to follow the trend. This is not a bad chart. That's why I'm only saying a fifth. It's just that it's just getting away from that green zone where we know we get periods. Things look great here. This is why. Did it look great there? Sure, it looked great there, right? It's right here, there, here, there, right? It kind of looks like it does now. And then lo and behold, I don't know, hashtag banking crisis. We can't see the future, okay? And that is why we have, hey, hopefully it's we now, I don't know. But that's why we have this idea that because we don't know the future, we just put a bid in, get some skin in the game. And if I get tagged on that, I'm not going to lose any sleep on it, But I reckon it would annoy us more if it kept going up than if we got a bit tagged on 1/5, right? So that's why we get the one. I've never said 1/5 before, but it's a methodology. And again, it's finding that flexibility in your approach to say, well, if I believe these are good stocks, right? Forget charts, but if they're good stocks, I want to have some skin in the game. But having that skin small enough that if there is that mean reversion, we don't get tagged. But ideally, we find these earlier, ladies and gentlemen. And that's the other thing. That's a big message here. And here, hopefully you can see this is the place to get on board. And I know I didn't cover it when we were there in session because I answer your questions in these sessions, right? And you have to ask the question for me to cover it. But even here, I still think that's an amazingly good candle. And this is a wonderful one, okay? But this is still good too. Look, I can't see any reason not to add risk on this one. So if it's 1/5 or 1/3, let's conclude our discussion on that one, because I think I'm going around in circles. What I do want to do now is see if we've got any data on this one, because it's one we might well consider buying. And it's I've lost it. IBRX, right, is the one. ISEE, sorry, ISEE. There we go. I knew there were 2 biotech stocks in this list with I's in front. This kind of doesn't surprise me. This was what I was expecting. Yes, we got some broker coverage, but I was expecting that we were going to see negative earnings per share. Look, it's got something, in the making. There's a product there, a drug, a therapy that they're working on, but the brokers are expecting it to deliver, and deliver big time in 2026, okay, in terms of the earnings. I'm not going to press anything else on this spreadsheet, because nothing I press will give me a valuation on it. The spreadsheet can't value companies that at least don't have earnings between now and 2025, okay? Sorry, forgive the spreadsheet for that one. It can't do everything. What I can do, though, is use this great platform here, Thomson Reuters Refinitiv Icon, which we pay thousands of dollars a month for me to have, so you can see it a few times a week. 12 estimates, and their average price target is 33.58, and their average rating is a buy, with 5 strong buys, 5 buys, and 2 holds, no sells, no strong sells. So no red flags in there to suggest that we couldn't continue to add risk to that one. Now, let us go to Anonymous, who has somehow found my favourite pick for the day, which is Monster. I'm going to talk about this on Ausbiz at 11:05-ish when I get on. And I'm going to cover some of these charts we've discussed today, because I just think there's some really good stuff going on in the US that average mum and dad Aussie investors need to know about. So that was my topic. I think that looks fantastic. And what I like is if I go to the weekly chart, look, it actually looks even better on the weekly chart. If I go to the monthly chart, it actually looks even better. Again, it's doing all the things I love, and I can't see any reason, even though it's had a nice big candle last night. It's borderline getting a ways away from my like-green zone, but I do think this is just such a big consolidation pattern. I'm not going to begrudge at that at all, and therefore I'm happy to go plus 1/3 on this. Ideally, if I saw it, I ran my scan a few days ago. This is where this candle back here is where you'd already be in, and really you've had what you should have done on this is go plus 1/3, plus 1/3, and you get my drift on this one. And there would have been even on that candle there, and this would be your fourth plus 1/3 at this stage. But we can't go back in time, unfortunately. So we will say plus 1/3 on that today. I'm curious now. I haven't done this yet. But let's head over here to MNST, because for me it's not important. The valuation doesn't impact my investing decision. That's 100% technical, but I do know many people listening still love to do their fundamentals, and that's okay too. 21 brokers covering. Average price target, it's surprising me a little there, and what you tend to find is that these price targets, when you have those long periods of consolidation, those price targets tend to aggregate a little bit, and then you have a breakout, and then the upgrade cycle comes. The breakout is being caused by increased perception of increased earnings down the track, right? That's why the price is going up, not because earnings are going to be less down the track. The perception is earnings will be better. How much better? Well, let's investigate. First, let's look back a little bit, and much like Coca-Cola, well, there you go. Look, Coca-Cola's going up as well, Monster Beverage is going up. So very similar theme. I'm guessing we're going to have a pandemic issue. I guess wrong. We don't have a pandemic issue here. So the quality of this one over the European Coca-Cola is far, far better. And then looking forward, we've got great growth. In fact, 17% compound annual over the next 3 years, which is the best growth we've seen. So it's kind of no surprise that we're seeing a higher PE here as well of 29.4. But when we look back, we can see a massive, massive quality premium built into this company. So much that investors have consistently been paying, mid to high 40s, in some cases over 60 times earnings because of the quality here. And I think this is a really appropriate target PE. Now, if you don't like that, you could, well, you can't, because this is not your spreadsheet, it's my spreadsheet. But if you said, well, no, I cap out at 20, I'm a 20 PE kind of person, then this would be expensive, okay, using that metric. But that's applying, again, your method of thinking to the market. And what this really is doing by saying, well, let's look at the future. Let's say, well, what's the median PE looking forward? What are the brokers working off based upon the numbers that we have here? So such a wonderful tool we have here. Then, if that premium is maintained, this is actually looking pretty cheap here. And I think what we're going to find is some of these targets are going to get upgraded closer to my target here of 64.55. But there's nothing at all in that valuation to suggest we cannot continue to buy Monster Beverage as per the chart suggestion. Perry trying to get in here late and claiming that Monster was one of his as well, and he some sort of stuff up here with clicking the wrong thing in the box. And yeah, sure, Perry, you were gonna get that one. I'm sure he had it as well. So well done to everybody who picked those. I think that's the bottom of the list, certainly for the Zoomers. Let's head over to the streamers again, and we've got from Hugo FIX. I wonder if that's the right one. Comfort Systems. I don't think that is, because that's we've got two X's there. Let's go to one X. There you go. That's a relief, because FIXX looks terrible. FIX looks amazing. Look, ordinarily, let's say that candle wasn't, forget the last candle, I would say, I don't like these black ones. I never like big black candles in the mix. The price action, was starting to come back. But they're short-term things. Long-term things, this was still fine. No questions asked there. And much like that Monster Beverage, there's a really strong sort of consolidation phase through here, which, well, there you go, lo and behold. And we can see it's a great illustration of what I keep telling you, that previous points of supply, if my theory is correct, should act as points of demand down the track. And I won't go into the big long-winded explanation on that, but that is what I believe. And then confirming it the second time with this candle is quite good. I wouldn't have been a buyer on that candle. There's no way I could have foreseen this big white candle. But now that we do have it in the system, I think the fact it took out this peak here is very impressive. And there's so much momentum. I'm not too fussed about this. And this probably was a reaction from 150, I think. Maybe that was a little bit of a reaction from 150 and a bit of supply sort of nagging at the market. And then I'm guessing at the start of March, hashtag banking crisis and whatever. But this is our second go at 150, and I think we have eliminated a great deal of supply there. Long story short, there's nothing in this chart which tells me that I cannot go plus 1/3, and therefore I think this is an at-risk sort of situation. With that in mind, let's head over to the spreadsheet and check out what FIX looks like here. I don't know why I keep doing that, but FIX, which is Comfort Systems. Excel is, look at that. You've gone all blank there on the Excel spreadsheet. The Excel, and what you can't see, what I can see is that it's gone all retrieving. So it looks like Thomson Reuters has gone kaput. So what I might do is just close that window and try and restart it. And whilst that's going on, now I have to change all the other factors here, which you can't see. Change it to the United States dollar and go FIX dot. And I didn't bring it back. Oh, that's annoying. I thought it would appear back on your screen. Okay, given the time, I think with that broken now and the fact it hasn't responded to a restart, let us just stick with the technicals from here. Okay, apologies for that, but I cannot control the Thomson Reuters platform there. Okay, this one is the chart looks fine, plus 1/3. This is from Prodontome1 on the YouTube. Hello, Carl. Would you have a look at ON Holdings, which is ON? Looks very good. Yeah, look, look. Little black candles, a couple of black candles, a couple of shadows. I don't think there's anything to worry about there. The fact I paused means it's probably not as good as some of the other ones we've seen. But no, there's no complaints here. Am I going to add any risk to it? I don't think last night's candle is strong enough. Certainly the lower shadow is great, because if you look at what happened, we're seeing a bit of a correction through here. And to be fair, we haven't seen the greatest broader market conditions through this session. In fact, they were very bearish sessions on the on all of the major indices. So I'm talking about this day here. So if we call that, well, let's call it what it was, which is Tuesday. And this one would therefore be Wednesday. And I know I'm too zoomed in to make a count, and then obviously that's Thursday there. So Tuesday, Wednesday, very poor candles for the broader market, so we can forgive those. And last night's it's fine, long lower shadow, but I just don't like the black body there. So there's not much to do here. It's just a matter of waiting for a confirming candle, and probably one I think that maybe even takes us back above that last little peak, and that peak there is 33.75. So if that occurs and you see a candle that looks something like that, then I could go plus 1/3 if that's the case. But a happy holder, no question about it until then. Let's have a look at the VanEck Gold Miners ETF, which is GDX, which is that one there. And I don't know, do you trade this or do you trade gold? Look, this looks fine. Could I add risk here? I think last night's candle's very good, but we've seen this a few times today. That candle's a bit disturbing. So much like the last example, we'd want to see just a little bit of confirmation come in and see the white candle close above that high. And that high, I'll give you in a second, is 34.22. So if we saw that, then yes, I could go plus 1/3, because we're doing what I've said we need to do many, many times, is that if you can find yourself a nice light green zone, a nice dark green zone, we're then looking for pullbacks into that area with some nice candles. So a happy holder in the meantime. Let us talk about, I like the new haircut. It's random each day. There's no new haircut. It is completely random. And from Dr. Bullion, let's have a look at MAY, which is, I'm not finding it. And maybe Dr. Bullion might mean the Australian MAY, which we're not going to find here. MAY. Dr. Bullion, are you sure that the ticker code on the New York Stock Exchange, or any of the exchanges over there in America, is MAY? Can you confirm that for me? Because I don't think I have it. Apart from that, I think we have reached the end of the list. So unless Dr. Bullion is going to grace us with an update to his request there, we are going to adjourn. We'll see how he goes. And what I will do is say that we're here 3 times a week. How about that? You can catch my analysis. It's an ASX stock, says Dr. Bullion. So that's Melbana Energy, which is a uranium play. And we'll cover that on Tuesday. Dr. Bullion, you're an absolute legend, because what a great segue into this slide, which says that if you want your ASX stocks covered, I'm going to give them the same treatment that I gave these US companies today. But that's on Tuesday at 1 p.m. And then on Thursday, I reckon my favorite session is the macro, where we go big picture. We look at indices, commodities, we look at bonds, we look at crypto, we look at Forex, all the stuff that has an impact on your portfolio, but stuff we can trade as well. To register for any of my webinars, head to www.thinkmarkets.com/au webinars. If you're not a client of ThinkMarkets, well, you really should be, because we are the good guys in the Australian broking scene. As I suggested earlier, you can trade your Aussie shares. You can trade Melbana Energy, MAY, on the ASX for $8 at flat rate, CHESS sponsored. There might be a cheaper rate out there, but they won't be CHESS sponsored, I can guarantee it. And they're probably going to charge you all sorts of fees for putting your money on the platform and then taking it out again. So be careful of those other brokers. But if you'd like to then trade these US equities with us, we do have them through CFDs. If you don't know about CFDs, Nick's your guy over there at ThinkMarkets, give him a call. Say, hey, I want to speak to Nick. And Nick, I want to trade US shares. Tell me what's the best way to do it at ThinkMarkets, and he is going to help you out with that. But otherwise, you can trade your foreign exchange, your crypto, your commodities, all that other wonderful stuff. We are an award-winning broker. That's why you would want to do it with us. Plus, we have offices all over the world. We're regulated all over the world, so we are a safe company to keep your money with as well. We have world-class trading apps, everything you need on those, with dedicated account support as well. You get to speak to somebody like Nick rather than those pesky chatbots, okay, which are not chat GPTs, let's face it, they're lousy. thinkmarkets.com/au for details. If you're watching me on any of the streaming services, please hit the subscribe button to stay notified of all of my future video updates. And it's very important, that you hit the like button to let me know you like what I'm doing, so I continue to do more of it. Your support is both welcome and valued. Thanks for catching up today. All the best for your trading. Until catch up again. Bye-bye for now. But before you go, don't forget that everything we discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this information, consider it carefully or seek the help of a financial professional. You can learn everything you need to know about ThinkMarkets and our products by heading to our website and downloading our PDS.